Good morning, traders and investors. Welcome to Thursday's jam-packed edition of Benzinga's pre-market prep, brought to you by the good people at Options House. Joe, what do we got on deck
You
today?
know what, Dennis? Or sorry, Joel. I don't think that we're going to be able to get to everything today. It's just jam packed. I mean, it's Fari Thursday, obviously.
Oh,
So couldn't have a Thursday without Fari and his what was the segment you want to call it, Joel?
well, we're debating, and maybe with our listeners, either don't be sorry and listen to Fari,
Uh
Boo.
or Fari Tales.
well,
Fairy tales.
Dennis's
I
boo
like
meter
fairy
went off
tales.
already, so it looks like we're going to go with Fari Tales Thursday.
I
Fari
like
Tales.
fairy tales.
We also have a personal friend of Dennis and Joel, Joe Saluzzi from is it Themis or Themis Trading?
Themis trading.
Themis Trading, co-founder and partner at Themis Trading. Saluzzi has provided expert commentary for CBS 60 Minutes, BBC Radio, Bloomberg TV and Radio, CNBC, Fox Business, New York Times, Wall Street Journal, so on and so forth. So that's what we've got for you guys today. We're shifting up the interview schedule a little bit. Fari will be on a little bit earlier, as will Joe, so that Dennis can be a part of the conversation for longer. What do you say to that, D?
Sounds like a plan, Joe. We've got a good plan here, and we got the futures
Well,
rolling here.
before we do that,
Joel, but before
before we,
got
I have
tails.
I have a major announcement that I'd like
All
to
right,
make
tell
on,
me.
on the news waves here.
Here we go.
Are you guys ready?
Ready?
And we can kind of roll it in a little bit of the Joe trivia here. Lisa and I have found a new TV show. For the first time since The Sopranos went off the air.
Oh,
Walking
no, The
Dead.
Sopranos.
Parks and Rec.
Okay, now
House of Cards.
Wait,
True Detective.
Joe got it already.
Yes.
Joe got it.
So-
House of Cards.
Season 1 or Season 2? Did you start back at the beginning?
We started at the beginning.
You don't even know what you're in for. Everyone in the chat can attest to this, and anyone who's seen House of Cards will tell you you are in it to win it, Joel. Your life will change profoundly going
Well, you know
forward.
what? I just like it because I love the deception. The backstabbing. I mean, I can already tell it's going to be a great
Can
show.
you relate to all that, Joel?
Yeah,
I know.
mean,
Well, you think it's just going to be another inside Washington political
no,
drama or
no.
something like that, but Kevin Spacey is the man. Dina and I just finished season 2 the other day, and it's astounding.
and
Joel,
it's sinister. I love it. I love when he looks at the camera and sneers. Well, just as he's getting ready to backstab somebody. So, yeah. Lisa was watching a episode of Sopranos the other night that I saw from 10 years ago. I'm like, okay, this is it. We gotta
hey
besides
Lisa,
sports.
if you're out there listening, I do the same thing because I'm still upset that The Sopranos ended, and I pretend that it hasn't. I go back and watch the series over and over again. I've probably seen it 6 times. I'm willing to admit it.
Right, and she did not. I was watching Horse Players for a while. I couldn't get you guys hooked on that. Did you guys ever watch that? It's on, believe it or not, it's on the Esquire channel.
Kurt just interjected. He said he wanted to get in on that.
Oh,
Wait, have you seen
yeah.
it before or no? No, he wants to be in on it, Joel. So you guys can talk about that and
Because
not bore everyone else.
I,
that's
I
listening.
know that. I mean, I was gonna apply to be on the show because they put all these horse players on, and they go to the races. And they have them there for 6 races. Every time I'm there for 6 races, I could pick 2 or 3, and not make a big deal out of it. But
So can I send you with money next time you go?
let's go. Maybe we'll do a road trip here.
Wanna-
Maybe we'll make it a Friday or Saturday night outing if you can break away from making those wedding plans. But anyways, we got to move into the show. And Dennis, you go ahead with the S&Ps there. Sorry to interrupt you.
S&P futures are trading up 3 points. The buy the dippers added again there yesterday. We got down to the 1853 area and then started rallying. But we are rolling
Dennis,
to the June
you messed up. Yeah,
futures
okay,
here.
go ahead. I was gonna. We are trading in the June contract, so things are.
See, I'm on top of it.
Yep, things are a little bit different. Had a slight dip off the open. All we can keep an eye on. I believe we're already through it. Yesterday's high, if I'm not mistaken. Yeah, yesterday's high in the contract was 62 even. We've even blown that away. So up we go.
1867.50 the overnight high here, and yeah, the buy the dippers are back at it again. So what's the adjusted high here, Joel, of the overall move? Because there's about a 7-point difference
Yep.
between the March and the June. What's the overall high now?
1880.50.
1880.50. So we're about 17 points off of the high. You think we can see that today?
No, definitely not. You want to bet a lunch on that?
Are you going bearish or bullish? You're going to owe me a lunch here for McDonald's really soon here, hopefully. 98.70. I'm only
Yeah,
60
I
cents
saw
out. I got up
that.
to 99.03. I was close yesterday.
Yeah, good thing I
So,
had my order in there for a million to sell at 99.
yeah,
Uh,
you're blocking it up there on me. You would do something
I
like
just
that,
want
wouldn't you? Just to
to
save lunch.
do an adjustment on the super key levels. You remember we were talking about that triple close in the March contract at the 1877 level? Well, now if you adjust it to the June contract, 1870 is the key number. That's right in between the two closes of the all-time high close of 1871 and then the close the previous day at 69. So 1870, that's my target on the upside if the rally can continue. Besides that, 75 even was your high on Tuesday, and then the all-time high at 80.50. But what about crude? Crude's getting a little bit of a lift here this morning. Are you getting bullish crude at all, Dennis?
Well, we consolidated for a long time there yesterday, trading basically between 97, 70, 98 bucks, and we're trying to lift here this morning. We're up 32 cents, trading at 98.31. So I guess short term, you can say maybe we're starting to drift a little bit higher here. But long term, the trend is still not your friend here. Ever since we topped out after the whole Ukraine stuff, it's pretty much been straight down.
Yeah, we dipped below the close only by 18 cents or 19 cents. Had a 97.99 close, got to 97.80. Got a pop here above the 98, 98.60 the high. Let's look at that. That's what? Um, 20 and 60, 80-point move. Add 40. 98.20 is going to be the point of control here. Holds 98.20. We could go back up and test that 98.60. Below that, we'll come back. I think bids will thicken up now that you made a 97.55 low from yesterday, 97.80 so far, and the close at 97.99. I think the bids will tighten up around 98.
We're quoting the April gold futures now too, Joel. Is that what you want to
Heck
quote?
yeah, man. Heck yeah. Oh, yes.
Okay, we're going into April, so we're looking at about a 4 point difference, 3.5 point difference between March and April. 220, we are down here with gold today. There's a rarity. We're usually coming, and gold seems to always be up. Well, it's down a little bit here this morning, a little bit of profit taking maybe. Yesterday had a real nice run.
Yeah, finally got through that major resistance at 1355. That'd been 4 or 5 highs. I believe it was 4 out of 5 highs in that, and then it broke through it yesterday. So you breakout traders probably had a good day. Hit 75.70 in today's session. Let's see what yesterday's high was in yesterday's high was 71.30, and I did see the 75.70 number. I was looking out on the weeklies, and back in September of last year, we hit 75.20, so hit a good resistance level in gold.
Well, let's move on to the big earnings play of the day, the one that everybody was waiting for, and it is Plug Power. Obviously, the most volatile stock on the exchange here is trading up 40 cents here. They reported inline earnings here this morning. Lost 8 cents against the estimates of losing 8 cents, so in line. Revenue is pretty good, 8.03 billion versus 7.45 billion. So a nice beat on the top line. It is popping here a little bit this morning, trading 722 right now. What's the pre-market chart looking like here, Joel? How high have we gotten on Plug?
We've been considerably higher than this. Let's just take a look at the intraday chart, and it looks like we popped over 750. The exact number is 775. Actually, is it 780? We hit 780 in the 7 to 715 bracket, pulled back down to 720. Now, looking at this intraday chart, look at that. It made 3, 4 attempts at that 770, 780 level. So I think we'll keep an eye on that as major resistance. I mean, you had a lot of people buying on that crash down, so we'll keep an eye. If it gets above that pre-market high, does have some room to run. I mean, there's been, the vacuum down day from 1172, but got a nice bounce yesterday. Was that move to 532? I mean, I blinked off the open. Did they just crush it off the open? That must have been opened at 582. So
Yeah, and you know what? Sometimes you can get a nice play and a nice read because, like we were saying, it was trading down early in the pre-market, and then it had started bouncing back and was trying to go positive pre-market. Well, what happens as we approach the open? Lots of institutional sellers may be coming in, selling it at the open. So you basically had a washout pretty much right off the hop. Stock opens down near the opens and then tanks down to about 530. What was low? 537? Is that
532.
what you got?
532.
532, and then we were just straight up since then. We basically rallied just straight up about $1.50 real fast in like the first 20 minutes of trading. So you can get a good tell. Sometimes where stock opens, obviously watch that price. It comes back up through that open. It'll sometimes not look back. So sometimes it's better than to pick a bottom, wait for the stock to open, then let it tank if it's going to tank. And if it comes back up through where it opened, then sometimes there's some good follow through. I think I learned that one from you, Joel, back in the day.
Right, and also just if you want to use a stop parameter on something like that, you would theoretically use. I mean, here it would have been a 50-cent stop when it went back up through the 582. That's a pretty generous stop. But you look, as it went through there, it just paused for a second at $6, and then off to the races.
Let's look at the other ones, BLDP here, and let's take a look at FCEL because they're obviously going to move in sympathy here today. You've got Ballard Power trading up about 19 cents right now. But if you're trading these stocks, keep an eye on Plug. It will probably be your leader here once again. So BLDP trading up just 18 cents here. FCEL trading up 12 cents.
Same pattern with these. You're finding resistance in the bracket here. Last 3 or 4 brackets. 590 is the level in BLT to keep an eye on. Did I say BLT?
Yeah, you say any ticker symbol, but we know what you're talking about.
Oh! Now don't you
You and symbols.
don't join the joker. When's the last time I gave the wrong handle in the S&Ps?
Oh, you haven't been giving handles lately. You've been smooth like that. He stays away from that. 'Cause he likes to say 1764 against 1864.
Did somebody say bacon?
Bacon Bowl, that's going to be a sponsor of our show. 366 is the pre-market high in fuel cell.
Let's move on to a couple other earnings here. We've got GoGo reported earnings here too. 25.70 is where it's trading at right now. They reported 26 cents. They lost. Everybody seems to lose money, but they go up anyways. 92.6 million revenue.
Whew.
The guidance for 2014 kind of right where it is in line, 400 to 422 million versus 414 million. So it's kind of all over the place, above it and below it. Doesn't matter. Stock is popping. Man, if you're looking at a lot of these earnings plays, a lot of them didn't report that great of numbers, and they all go up anyways. We're just in this type of market where everything goes up no matter what. GoGo flying up $1.91, taking out that key 25 resistance level.
Oh, yeah, look at that, man. Back in the day, you get a chance to play this going through 25, Dennis. I think you would have bought like 10 or 20,000 going through that 25.08 level. We did get much higher than that in the pre-market. We did get to 26.37. Now, that coincides from other highs that we had in the market. No, it doesn't. We had a 26.90 high on January 8th, 26.38 the day before. So kind of no man's land up here. Just keep in mind that since we hit that pre-market high, 26.37, we've had fallen back almost 50 cents. I'm looking at for the whole 25.50. If not, wouldn't you love to see this thing come back down to 25?
25, yeah, because that was 1, 2, 3, 4 highs basically in the same area in the last 5 days before it broke down a little bit there yesterday. We get back up over that 25. We do say old resistance becomes new support. Even Harlan was saying that yesterday. Did you notice that? Seems like a lot of technicians like that little saying, old resistance becomes new support, or old support becomes new resistance.
I think Harlan has more corny sayings than I do.
Yeah, you think so? I don't know.
Yeah.
We'll have to keep track maybe. You give out quite a few there, though, Joel. But I guess Harlan's only on for 15 minutes, where you're on for an hour and a half, so there's a lot more chance for you to get corny.
You got Brett chuckling over here. You got Brettster going. Okay, so what are we moving on to now?
J-Dot's talking about the call earnings, CALL. Magic Jack, that's replacing all your telephones there, all your long-distance carriers there anyways. It is popping big time here, and this is the report. 69 cents versus 41 cents, blowing the bottom numbers away. 38.2 million versus 35.93 million, blowing the top numbers away, and raising 24 sales guidance up to 158 to 163 million versus 147 million. And this stock is off to the races this morning. I'm looking at my leaderboard here, and CALL is right near the top. It's fighting with APPY for number 1 on the exchanges here today. We are trading up at 21.5, breaking out to new highs.
Wow, so people are opting for the cheaper phones, huh? That must be the mode here. 22.47 is what we've hit in the pre-market. Had a dip down to the 20 $20 level after that. Boy, this is a tough one. I mean, you're busting above the previous high of the move at 2038. I guess you'd be looking for any kind of a move pull back to 20. Also fighting a huge gap here, but I've learned my lesson waiting for these stocks to fill the gap. It just doesn't happen. Looking at I don't even know if this is an all-time high for the thing.
No, it was there. I'm just looking at the weeklies here. If we
Yeah,
go out, we were
2650,
12.
2650. Still a ways away from that. You did have a high at 2112. We've already taken that out. The Rush song, 2112. I don't know. This is just a tough one. I guess I would use the pre-market high of 2247 as a potential resistance point.
If we do pull back, keep in mind that you did have that kind of double top area just above $20 at 2038 and 2030. I'll call that whole area $20. I think this stock may actually find a few buyers there if she pulls back into that area. A few other ones here to talk about. And Krispy Kreme donuts, one of your favorite places there, Joel. It's up huge here this morning. They did announce solid earnings. We've got them actually the earnings weren't that great on this thing. 12 cents versus 13 cents. 112 million versus 119 million. So it's a miss on the top, a miss on the bottom. They did guide 2015 slightly higher, and they did announce an $80 million buyback. So not sure why we're popping this much, but we know this market, the stocks just like to go. It's been drifting higher ahead of the report, and is now taking off. And actually, you're back in a gap area where we gapped out down in early December.
Yeah, this is a tough one. Another tough one to call here. Gapping back into a gap area that was probably I'm not sure what took us down. Perhaps that was earnings last time. The stock got creamed. It probably wasn't, but early December.
One corny pun.
Yeah, and then I made a pre-market high at 22.30. Since hitting that 22.30, you're finding good intraday support at 21.80. So a couple numbers to keep an eye on. Krispy Kreme donuts is not true. You're right into this gap in the gap area. So I think I'd have to be on the sidelines until something was resolved here, either on the upside or the downside.
Williams Sonoma earnings here as well this morning. Buck 38 versus a buck 36, 1.47 billion versus 1.43 billion. So being on the top, being on the bottom, increasing the quarterly dividend just slightly, 31 cents to 33 cents, but they are guiding lower. Doesn't matter. They were 3 for 4 there on the good stuff, and they are popping the stock. Williams Sonoma is trading up at 62.5 right now, taking out that key resistance at $60, and it is off to the races. Last night I was like trying to short this thing. I was like, I didn't think the report was that good. I figured they might give it a little bit back. Nope, you just can't. And just buying everything, and there was no pulling the stock back, and it's just kind of just held up here in the 62 handle very, very well. Like, look at the run. It ran straight up, and it just is holding up there. Won't come down.
Yeah, well, it won't go above 63 either.
Channelingstocks.com, 62.50, 63 after hours. That's what I should have been doing.
Yeah, 63 just looks like a huge number to me. Someone's identified that as a place that they want to get out in stock. Initial pop took it over 63, 63.20, 63.10 with the highs back 430, 445. And then it just incrementally, you could tell someone said, okay, I'm coming down. I'm coming down to 63.10. I'm coming down to 62.90. I'm coming back to 62.70. They let it breathe a little bit, come back up to 63.05, and they were right back at it. So I'm not touching this thing at 63. That's a resistance. Will you take 62 versus 64? Get some multiple. Well, no, we're already at 62.53. So
you want to go bullish on this thing?
Bearish.
Is that? Oh, you're going bearish.
Yeah.
No, I'm not betting on that. I got to see how the McDonald's one turns out. I can't have two bets going with you at the same time.
Yeah, fast market.
And you still haven't paid up yet, so on the other one, on them steak
Hey, we're
dinner,
going out to dinner tonight.
You're going to give me, you take me to steak and shake.
Dennis and I, if any of you are in the vicinity of Oakland University in Rochester Hills, Dennis and I are going to be doing a presentation to the investment club there. So if you guys are in the area or you just want to fly in and see it too, it's going to be worthwhile. And then I'm taking Dennis out for a steak dinner at Ruth Chris, and then
Chris,
yeah,
really? Holy cow!
Yeah,
Wow.
yeah, I got the reservation.
Get the filet, Dennis. Get the most expensive thing.
Oh yeah, for sure.
I'm gonna get. I already know what I'm gonna get. The porterhouse.
Wow, I was really expecting steak and shake, so I'm impressed, man, with the Ruth's Chris.
Well, I'll tell you why. Well, no, I'm not gonna tell you why, because then you'll give me a hard time while we're going there.
All right, Dollar General. Earnings here, $1.01 versus $1.02, 4.49 billion versus 4.63 billion. Missing the top, missing the bottom, and lower guidance, the triple whammy. Stock was tanking hard earlier, but it is coming back here.
Oh.
Seem to remember this last time too with like one of these dollar stores where they tanked it early on the earnings report and then it started popping back and grinding back and came back all the way and ended up positive. I think it might have been Family Dollar actually that did that. Dollar General though, so it is coming back here in the pre-market. Look at that low. How low did we get?
56.10.
We have
So
come back a long ways here. When you see a stock go straight down and then just starts climbing, 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 a lot of times it just continues the climb all the way to settlement. So you do have resistance up there at the whole $60 level if we continued to climb. What are you thinking on this one? Do you think this is going to be one that goes positive?
I'm not a big dollar store fan, so I can't. I can say that that dip down to 56 and change is going to be well protected now since you've had that kind of rally. It looks like, according to the print here, someone just puked 3,000 shares at 56.10 and then turned around and went north. Since you've had that rebound, now traded up to 58.85, Dennis, and here is a perfect situation. You have three lows between 58.66 and 58.93. So you got the dip, you got the rip, you're going into three old lows there. I don't think this thing gets above 59 today. If it does get above 59, probably rally up to that triple close area. But after that kind of dip here, I think there's going to be good resistance at those former lows.
Looking at just a couple other ones, Family Dollar and Dollar Tree, obviously sympathy plays there. So FDO and DLT are neither stock are really trading much in the pre-market. Both are offered down slightly, but if you're trading those two as sympathy plays, keep an eye on Dollar General, obviously your leader there. Vail Resorts, MTN, they reported disappointing earnings there. So it looked busy to me when I was there 2 weeks ago, but I guess I didn't have anything to gauge it off of. I couldn't even find a parking spot at the place, but $1.60 versus $1.87, so the earnings were not good. 452.7 million versus 471.1 million. So miss on the top, miss on the bottom. They are doubling the quarterly dividend though, so I guess they think the outlook is still pretty solid. They're taking the quarterly dividend from 20.75 cents up to 41.5. So that is some good news, but the stock is trading lower here in the pre-market. It's down and offered at 69 bucks right now, which would put it down a couple of bucks.
Jake and I were having a good debate about this one. He wanted someone to come out and say, hey, the weather helped us with something, the ski resort. And then, being me, the Debbie Downer, I'm like, well, maybe people couldn't get there because of the bad weather. So, whatever the case is, the stock is trading substantially lower this morning here. Just spiked down to 68.75 and really cannot get a bounce off that level as of yet. As Dennis noted, it's still offered there. But for you bulls, there's still hope here. There's a double bottom here at 68.75 from the pre-market. Hit 68.80 on March 3rd, and then you had a 68.75 low back in February. We'll take a look at the dailies, and then you have some other lows here going down in the mid 68. So I say it's opening into support. But Dennis, we got to take a break already, and it's time for Fari Hamzei, founder of Hamzei Analytics, and we're going to get Fari on, and we're in a great mood to have him on. We'll be right back with you. Welcome back, traders and investors. I know it's Thursday, and it's a time of the week where we have Fari Hamzei on, founder of Hamzei Analytics. Fari, we got a question for you, though, on air.
Good morning, sir and sirs, and always a pleasure to be with both of you.
Welcome back, traders and...
Go
Okay.
ahead.
Oh, yeah, kill that.
Yeah, I had a feedback, sorry.
Who's that obnoxious voice there?
Exactly,
Okay,
bravo.
so
This early in the morning, I mean, come on. I'm looking at my watch. I think I'm on Rob Ford time.
All right, we're trying to name the segment here because we have you on every Thursday.
Oh, jeez.
And we've come up with,
Maury, charge these guys.
and we've come up with two names. Okay.
No, notice the guy who charges, his name is not Roman. It's Maury, okay? When we come to collect, they're Romans.
Okay.
Remember we were talking about baseball?
Yes.
The Romans who didn't know how to use the glove, they only learned the other part.
Okay.
He's not getting it.
Yeah.
What kind of coffee you gave him?
Okay. There's two names we've come up with, and the first name was by
Sure.
Brent. Brent came up for a name
We
of
got
yours.
three now. Jared's coming up with a name.
Oh,
too in the
Jared's
chat,
coming up
but-
with a name.
Yeah, okay. Give him the three names.
Okay. The three choices are Fari Time. Okay.
Jared's saying Fari.
Okay.
I think 5 times is taken. Hold on. 5 times are taken. We used to have, now weather's changing. I have a sun deck on top. I live in a penthouse type loft. So there's a sun deck on top. 4 p.m. Friday afternoons, by invitation only, is barbecue time. Once the spring is here, that's Fari time. Fari time is taken.
Okay,
Oh,
Fari
he's
time.
already
Okay.
got it right time.
Okay, how
First
about,
barbecue.
all right, this one was Brent, and Brent came up with Fari Tales.
I like that.
Okay, we can keep that under consideration.
Okay, that's what I
All
consider.
right.
And then the one, I know you're going to like the one that I came up with.
Oh, no. See, you're stacking the
Joel
deck
comes
already.
up with
Are
the
you ready?
corny
Are you
puns.
ready? And
I'm
I want to...
sitting down. Go ahead.
Corny
Okay.
puns of the day. He
Do-
comes up with the corny puns. Give the corny. Give
Are
it-
you
give
ready?
it-
Are you listening?
Sure, I'm sitting down. Go ahead.
Drum roll, please.
Make my, as Harry, Dirty Harry used to say, make my day.
Okay. Don't be sorry and listen to Fari.
So,
Oh,
corny.
don't go there. No. Because you know why? Because I'm always going to have some sorries.
Okay.
Exactly.
My answer to that is going to be, why did half of people I meet, their middle name is Sorry? Because when you say, I'm sorry, wait a second, that's not your first or last name, so it must be your middle name.
Okay.
No, remember, you know why? Because I'm both long and short. And in any given time, there's zillions of people out there long and short. So you're always hurting somebody,
Okay, so we'll
whether you're right or wrong. You see my point?
yeah, we'll work out. Fari Tales right now.
I like fairy tales.
Okay, that's what we'll go with. That will be our...
But it doesn't mean that you should sit there.
Okay.
I'm going to pull a Steve Jobs on you.
Okay.
I expect you, with your IQ and your knowledge, to do better,
Okay.
to improve.
So
Come back next week. Let's see what you got.
Okay.
That was always a Steve Jobs. That's how he motivated people at Apple. He'll never accept the status quo. He will push you to the wall in terms of your own finding yourself, okay, and getting your headings and getting your drive and excelling.
Okay, that's good. All right, now we're
Yeah, so come back next week. Let's see what you got.
Okay, maybe I'll go to Joe, see what Joe can come up with. Okay, so here we are. We're out of earnings season, right?
Yes, sir. Yes, sir.
So I know you like to make the plays. You look for drivers, okay?
Mhm.
We're out of earnings season now. Now, what are you looking for drivers? You just scanning your charts? looking for
S&P
signals?
futures,
Okay.
you know, SPYQs on an option basis. That's all you want to look at right now. Usually what we do is we spend about a week prior to the EPS season getting ready for it. All the names we want to look at what the whisper numbers are, possible surprises we may see, and we do it on a Google Docs among our option team. And so it's a collaborative nature, and we get multiple eyes on it, on the targets, because there's a lot of data. Okay, it's really easy to make some mistakes. Now, then we execute that. That execution takes about 3 to 6 weeks, depending on what kind of names you're looking at. Every season is different. We don't go too far out. We kind of sit in where we like, what we're familiar with in terms of asset classes and I'm sorry, sector classes, and they're all stocks, but sector classes. Maybe a few we will wander out into on a limb to learn something new or a new name, what have you. For example, Twitter would be new for us. Okay? We'll take a look at it. That kind of
let's
stuff.
take a look at.
And then, hold on. Then the inning season finishes. Where is that? We're like 6, 7 weeks into a quarter.
Correct.
At that point, we shift into timing, market timing only. Because the other names, it's a gamble. If you were in the day before and it popped. You see my point? Yeah, we're event-driven. How do we know when the event is? We don't. Not individual names, other than earnings season, okay? But let's say they make a major appointment. Put a new COO in. Maybe there's a strategic M&A. Those you cannot time. There's no way you can tell. Not unless you have inside information. We don't want to touch that. We'll never go close to that. Are you kidding? We want public data that comes to us. So to execute that, we have no other choice. But this 6 weeks, kind of play around with the high leverage plays, which is spreads on options and index futures. And when you have somebody like Vlad Putin, he'll give us plenty of action. Look what he's done the last couple of weeks.
It helps with the volatility. We just had some retail. We just had some earning or break here at 8:30. The numbers. Brent, do you have those retail sales numbers just for our listeners? If Brent is there, I think they were the continuing.
Okay, I can look them up off of Bloomberg while we're talking.
Brent's got it. Was it retail sales?
We just had 3 data points come out. We had retail sales for February up 0.3%. There is the advance reading, the X autos reading, the X auto and gas reading, which is the core number, and then also something that's called the control group. All of those came in at up 0.3%. We also had initial jobless claims coming in at 315,000, a little better than expected. 330,000 was the reading. And then we also had import price index for February that was up 0.9%. Economists were looking for a gain of 0.5%. Bunch of data just out.
And we did pop a couple of points on that. Fari, which way are you leaning right now? Because obviously we had the buy the dippers.
I just posted 2 charts. I just posted 2 charts for this discussion on our market timing feed on Twitter, which is at Hunter Killer Sub. That's the Seawolf class submarine out there that we have on the North Atlantic deeps, watching for the Akulas. Akulas are the shorts coming in from the commies. All right? Now, our bias there is to the upside. All you have to do is look at the structure. Right now, especially yesterday's action, I would stay long. Now, on our market timing email that goes out Sunday night to members only, we said this is a tough week. We said no bias. Every once in a while we have done that when it gets very, very choppy and the direction is almost daily or hourly. That is, you're rolling a dice. And by the way, when you're in an advisory business, your clients want to see that every once in a while. Saying people not to trade is advice by itself. Okay? Saying people, hey, I don't know, there is no bias here. This is too bumpy. This is too much of a Vegas right now. You could go either way. That in itself is an advice. That was our advice Sunday night. I think Kyle and Jason got a copy at your shop. We always do that as a courtesy on Sunday nights. If you look at yesterday we had a hammer with a bounce off I believe that's a 20-day bar. It should be on the charts I sent you, both SP1 and timer. Yes, we did. That was a 20 bar, 0 sig, which is a yellow line. That's a 0 sigma, 20 days. And then if you look at it, day before, we had touched all-time high and was a outside bar, daily. Not outside week, but outside bar. Now, take that into a context that the prior week, the week that we just closed, on a SP1 Momo, the weekly charts, which is on a buy signal, very long-term buy signal, put in an outside bar reversal at +2 sigma. That's a lot of gibberish, I understand that. But the bottom line there is we're breaking out to the upside slowly. That's what I feel. Would I bet my last dime? No, I don't bet my last dime on anything.
Okay.
But I would. I'm actually of the school that says size kills. Small amount, a lot of bets.
Yep.
Because there's a very low chance of getting busted like that.
All right.
You can't be wrong. You can't be wrong in those many trades. You see what I'm saying? The only way you're going to go bust yourself is you increase the bet size, and that's a suicide. Don't do that.
Diversification works in trading as well, as opposed to just investing. That's what you're saying.
Well, we're not really. We're making a series of small bets. Could be same asset, so we're not diversifying per se. But we're not throwing 5% in a trade.
Okay.
My max level is 1%, 2%. And I mean, at 2%, the blood is rushing to my head. I'm having a headache. Yeah.
Okay. The S&Ps, I mean, I like to keep a track on the daily highs and
Sure.
lows as well, but I also
Right.
like to put emphasis. I mean, you had 3 closes within 2 handles. You had the all-time, and I'm talking basis the June here. You had the all-time high close at 1871, and then that was surrounded by closes at 1869 and 1869, 1870. Do you put any kind of emphasis on a multiple close area, or do you just stick with your sigmas?
I'm more of an internal guy. That's why I like to trade SPX because it's got it's the D index globally. It's got the most number of indices. That means what? I can build a cockpit. I can each one fed to a different indicator and give me a reading, and then go back and find some max and minimum limits. Draw those lines. I mean, the machine does it automatically. Draw those lines. See if I'm getting close to it or not. And then you can pick whether leading indicators were lagging, what are conforming, what are happening, coincident, right in the center as it's happening. On the leading side is what I want to spend my time on. Obviously, I'd rather be early, not late. And because that gives me a chance to formulate the strategy once I get the signal, because each texture is different. So what I look at, advanced decline. And I look at it 2 ways, both for NYSE, the whole gang, in there, bond funds, all the crap that they throw in there, and SPX alone, the 500 names, where those are. It's in the second chart I posted, the SP1 Momo. You'll see it both in daily and weekly. I want to look at the weekly highs and weekly lows. And remember, they're going to be inverted. Because when you have the weekly highs, you're not going to have weekly lows, obviously. They're going to be very low. And when you have a peak in the weekly lows, you're not going to have much weekly highs. And then if you visualize that, if you step out, you'll see the bell curve. Okay? If you look at it carefully, you'll see slowly seeing either a Gaussian or bell curve. We're close to it on the advanced declines. Okay? Right now, we're not getting any peaking time here. Maybe we had something back in about a year ago type of a deal, and we pulled back. This is a peak we had about, what's this date here? May 17th, looks like. May 17th of 2013. That was a peak we had on 52 weeks new highs, for S&P only. Remember, all the S&P names only, the big 500 names, which is about 80% of U.S. equities. When that has been peaking, came back down, now we're much lower levels. When that happens, this is a slow grind. We're going to have a lot of naysayers. We're going to have a lot of people who have a problem with a number of issues. They keep on shorting it. You're going to have your buddy, what do you call it? What's his name? Dougie. Dougie is going to come and bet another 2% on this or that, or all in. Well, that's his favorite thing. All in, hash mark all in, another position. And we're going to, you know what? We'll take the money. Shekels are shekels. We'll take it.
Fari, what do you think of Twitter here? Do you trade Twitter at all? And I'm just looking at
We have traded the Twitter option, I think, once, and we won. There was only one time I think we did.
Away from it?
It was post after. It was. I think it was around the Christmas time.
Because there is a hell of a battle between the Bulls and the Bears on Twitter here right now, because this thing has had wicked consolidation since the earnings report. It's basically been trading between 54 and 56 for the better part of 2 weeks. This is going to break one way or the other. Which
Correct.
way would you be leaning on this Twitter chart right now?
I just look at some detail there. Let me switch it longer term. I know we don't have a lot of data. I realize that. My current indicators on my leading indicators on the current action is bearish.
You don't like that's been sitting here this long?
Yeah, I just don't like it the way it looks right now. And I'll tell you what targets I would have, and I'll tell you where it would be invalidated. Okay, I think that's probably more important. I'm looking to see 51. I'm looking to see 51 violated. Okay, and that would be a good thing on the short side. And I would draw the line. I know it's a big wide band. Okay, but remember this stock has a lot of volatility at 59. Now, the 50 bar is above it. And this is the first moving average we have. We don't have a 200 bar. 50 bar is above it, slightly. But I'm sorry. It's not 59. I'm sorry. 58.50, 57.50. I'm sorry, or the wrong level. 57.50 is my invalidation. If I get there, the trade is bad. Trade is going to go up, and the short position is bad. The 50 bar is 58.70. All right, 58.67 to be exact right now, as of yesterday's action, not pre-market today. Okay, but that would be my target. Would be C51.
Okay. All right, Fari. Well, thanks for coming on. We got you in a little bit earlier because we have another guest coming on, Joe
No problem.
Saluzzi, partner at Themis Trading. But
No worries.
sorry, Fari, we are going to work on a better name for your segment. And if you
No worries, my friend. Don't forget to look at those charts.
I
Again,
like
they're
morning
posted
cup
on.
of Fari because I tell you, I really wake up when you get on Fari because holy cow, you bring the energy, buddy.
And
No worries.
if I come to Chicago and I'm there at a Friday and I'm there at 4:00, can I be part of that Fari Time barbecue?
I have no idea. I've got to check from
you gotta check
my appointment
Oh!
secretary. She does the invitations.
Okay. All right, Fari. Thanks a lot.
Hang your head.
Have a good
Discover
trading
on
day.
that one.
We'll be back
Thanks.
with
I
Fari
appreciate it.
next week.
All the best. Sure.
Okay,
Bye-bye.
thanks, Fari. Joel, Fari, he likes to bring the energy. Holy
It's
cow.
like the show is over. Let's end the show right now.
Fari is energetic, man. Man, he goes on his tangents and he gets going and he starts talking the quant stuff and it can get a little bit too much, but holy cow, man. You gotta love his energy and he comes on and he tells you, he's got conviction with his calls and stuff, and you gotta love that too. So he's bearish the Twitter. I'm looking at the chart and I guess this is why this is a market. I don't know. I've been kind of looking at it the last few days and it seems to want to go up. Some of the Momo stuff has been pulling back here. Well, Tesla came around there yesterday, but Twitter is not. Twitter is kind of just hanging out here. They've been defending it here a little bit. From a valuation perspective, you can look at Facebook and say $178 billion market cap. This is only a $28 billion market cap. Now, I'm not saying it's overvalued, undervalued, but when you compare it to Facebook, it looks cheaper to me.
Yeah, you know what? Two things. One is I wish I would have taken that 1920 bet. I very rarely shy away from a bet, especially, one with the market going up. So, hey, Fari, if you're still listening, I will go. I'll go for lunch or dinner at the Athenian Room in Chicago if you still want to take that bet. Maybe
How many people do you have bets with on right now, Joe? Holy cow, you might have a problem.
No, I mean, come on. They're fun bets, They make things interesting.
It's okay, Joel. We're here for you. We're your support group. We'll help you through this.
Okay, thank you.
But not until you pay off your debts.
Joe,
I know. That's
Joe,
the
do you
problem.
really
It doesn't
want to
pay
go
the
into
debts.
this on the Buffalo Wild Wings bet?
Oh, I was wrong one time.
And you
Experts
didn't-
are
and
wrong
you said-
all the time,
And
Joel.
so you wouldn't. You said I wanted you to pay up that one day, and you wouldn't. So I think that right now
Pay up on what? As far as I'm concerned, you're up several $1,000s thanks to me. So I think we call it even.
Well, don't talk about me washing on bets until you buy me a Potbelly or a lunch because we bet on Buffalo Wild Wings.
How many Potbelly lunches has the Tigo bought you?
The several. Okay. All right. Final thing that Fari said that was very important. And sometimes the best trade is no trade. And that's what he was talking about, that he gives his advice to his clients. And sometimes, what do we used to call it, Dennis? SOH, right? Sit on hands. And that's another thing. You don't, and that's the thing about day trading, when you used to be consistently pulling out 1, 2, 3, 4 grand a day, if there's times where, you're just hitting the rut and you're losing money, just sit back for a few days because there's not always the same kind of opportunity in the markets. I wanted to hop into GM here, and I can't remember if it was Mosca. And Mosca asked about GM, Dennis. That's kind of interesting setup, wouldn't you say?
Yeah, well, we talked about it yesterday, and we thought that 34.36 low from the February 6th might hold because it's coming down so hard into it. It was an area where if you were short the stock, people shorts were probably looking to bring it in. That's what happened yesterday. It actually bounced right off that, made the same low, 34.37, then popped directly off that low. So that double bottom is in there, so it does have that potential, but I don't know. You think you got another trade there if it pulls back? If it goes back there the second time, then I don't like it as much. I think you needed to get it yesterday.
Hey, I'd like to see it hold in there. Maybe make like a 34.55 low or something in that area. close in the same area, perhaps close above 35. Because even though it's come down really hard off that 38 level, remember this whole carnage started with a triple top. So maybe we can get a similar, double or triple bottom on the downside here. We've come down from the 37.54 high or 37.69. We came down really hard a couple days ago. The kind of momentum has stopped. Like to see a day consolidation for it to hold.
We're going to take a quick break here. We're going to go get Joe Saluzzi, and we'll be right back at you in a minute.
Welcome back, traders and investors. We have a very special guest on today, Joe Saluzzi, partner and co-founder of Themis Trading. He's a frequent speaker on high-frequency trading. And, Joe, I have to pay you the highest compliment because when Dennis talks about high-frequency trading, he's obviously one of the world's renowned experts. He refers to you as being the person when it comes to high-frequency trading. So how you doing today, Joe?
Joel, thank you very much. But we're doing great. We've been working here at Themis Trading for a number of years now and trying to identify those issues around, surrounding high-frequency trading and market structure. So it's a long battle, but we're doing well.
I can remember, Joe, actually, I was back in 2008, 2009, when I really started to notice my problems with my order execution, like my limits not getting executed, this penny jumping stuff, a lot of fun stuff happening. Probably didn't notice it as much in 2007, 2008 because there was so much volatility, so much stuff happening. But then in 2009, when the market started to slow down, I was like, man, I'm having trouble getting orders executed. And then you're on CNBC. I see this guy, Joe Saluzzi, on CNBC. This is early 2009. And you're talking about this high-frequency trading. You're talking about toxic market. You're talking about all this stuff. And I'm like, holy cow, this is the problem. This is it. I hunted you down. I called you, and I had a great conversation with you. And I tell you, I've been a huge fan of yours ever since, Joe.
Thank you. You know what it is, and what you found there, Dennis, was that the plumbing of the market changed, right? What you had prior to 2007, and we always use that mark as kind of like the linchpin. That's when Regulation NMS came out, which really turned the equity market upside down, especially for New York Stock Exchange listed stocks. Everything changed. So where your limit orders were out there being displayed on maybe on a book on the specialist floor where you had a chance of getting executed, well, now your limit order is going to be pretty much last in line because of all of the plumbing changes, let's just call it, all of the new fragmented markets, whether it's dark pools or various exchanges that have less than 1% market share. But what happened was the order that was on its way trying to get to you, let's just say you were offering 1,000 shares at 10 cents, someone wants to buy that from you, but by the time that order made it through it's pretty much, let's just say within microseconds, it never got to where its end destination was. It was picked around, it was sniffed, it was touched by many others, and then you ended up not getting a fill. And unfortunately, what happens is a lot of people don't recognize that the real cost of a lot of this behavior is the opportunity cost of folks who are not getting fills. Guys like you who are making markets, trying to add liquidity. All right, you were a liquidity adder. Nowadays, it's questionable what people are adding, and that the plumbing changed. It really hasn't changed much since then, and that's really what the problems are.
Yeah, well, really, there's just a middleman that's jumping in ahead of the order. So I sit out there with my limit order. Somebody sends a market order trying to get to me, and then you've got, internalizers stepping in the middle. You've got, obviously other ways that they get in front of your order. We talked about order types, different types of things. There's so many different ways where they seem to be able to get ahead of your order, and that's the real problem, isn't it, Joe?
It is, and unfortunately, the problems are rooted in economics, like every other problem. You tend to follow the money, and the money shows you that payment for order flow, which we've talked about ad nauseum, right? It's whether it's exchanges paying for flow to add to their books, whether it's retail brokers selling their flow to internalizers. Once the payment mechanism is in there, that's where everything got distorted. That's why your order is not getting filled. So one of the biggest things that we've been advocating for is eliminate all this payment for order flow. Get rid of rebates. Okay, we still don't quite understand why rebates are in the system to encourage quote-unquote liquidity is what the exchanges will tell you, but really it's a relic of an old system that, if you guys remember Island DCN way back, which was formed out of Datex, those guys back in the 80s and 90s. When we were at Instinet, Sal and I were at Instinet, Island was trying to get a chunk of the business, and they figured out, hey, let's pay for order flow, and we can take some of those limit orders that Instinet has and get them onto our book. Well, somehow along the line, Island's model made it into every major exchange around the world, and it still sits there, and we still can't figure it out. We would say, listen, why not just have a flat make or take fee? That way the exchanges still make the money because obviously they're providing a service and they do deserve credit for that and they should make their money. But why do you need to have a 30 mil rebate and a 20 mil take fee or so on? Just make it 10 mils across, say a tenth of a penny whether you make or take. No problem with that whatsoever, and that would change a lot of those routing issues.
Well, it's such a confusing structure there too, and like we were seeing, certain orders that are on certain exchanges will probably get executed depending on whether they're on a take exchange, whether they're on a make it, just depending on those rebates as well. Because if you're offering on like CBSX or something, and that's not going to be an exchange too much longer, your offer probably has a tendency to get filled before the guy offering on ARCA just because of these different rebates. So there's different incentives here that are creating issues here as well, right, Joe?
You're right, and that's we're only talking about lit venues, quote unquote lit venues like exchanges. Well, before they can even make it over to the lit venues, they have to stop and get pinged and prodded around the dark venues, and all the so-called what they call IOIs or there's lots of non-transparency. Dark pool has a reason why it's dark, because there's really not much transparency that goes on in these broker-owned dark pools, whether or not they are shipping order flow out, whether or not some liquidity providers are seeing your order, passing through, and then saying, you know what, I'll decline, I don't need to I won't fill that, I'll just move on to the next one. Well, that's where the touching the unwanted, sniffing and pinging on your order flow gets. By the time it gets to an exchange, it's usually been seen many, many, many times, and that's really, if you're getting filled on the exchange, you're probably going to get run over.
Yeah, you seem to only be filled when you're like last in line, like you were saying.
Yep.
Like it's the exhaust flow that's hitting you. And when you get filled, you don't want to be filled. And like at Bright Trading, we've got a couple hundred guys in our firm. And it's the first thing we teach them now is when you're sitting your limit order out there, you're like a sitting duck. If you're making markets there, because your limit order is last in line, like you're saying, Joe, and they blow right through you. So basically, only time you get filled is when there's a bigger size order coming through, and you look and you get filled at 50 cents, and the thing's at 40 cents right away. So really, it's hard for a human being to be a market maker anymore, or even for some of these other algorithmic systems. It seems like there's only a few top privileged participants that can really play this game and be profitable at it now.
Well, that's why some of these firms make money every day, right? There's a reason why, and we're not going to say whether or not that's some of these guys what they're doing is good or bad, but there has to be more disclosure on what's going inside these routers. There needs to be more. Whether it's the SEC, whether it's exchanges, you have to have when information is going through cyberspace in milliseconds and microseconds, and no one really knows where those routes are going. All you know are the end destinations. Well, that's where the problems are. Okay, and that's where the SEC should be focusing some of their efforts. Unfortunately, we don't have what they call a consolidated audit trail, which is being proposed now. It still hasn't been built. The bidder hasn't even been selected. Something like a consolidated order trail would give you a lot more information as to was an order routed somewhere, and it wasn't. Let's just say there's a negative fill connotation to one venue. You need more information. Right now, the regulators don't have enough information. They're going into a gunfight with a knife, and that's not going to make many people happy.
Hey Joe, did you? I mean, I've talked about a lot this with Dennis quite a bit, and I know my trading completely changed when we went to decimals, and now you have privileged participants trading at sub decimals. I mean, when you started doing your studying of the markets, I mean, do you think that maybe that the high frequency and this stuff really started evolving when we went to decimals?
There's no doubt that, decimalization, one thing that we've already said is that we're in favor, we think electronic trading, that's been a boon to the industry. It's been tremendous. It's been technologies. Cost savings has been tremendous. Look, we cut our teeth over at a firm, like I said before, Instinet, which was one of the original electronic traders out there. So that's a good thing. When decimalization came out, it was a good thing. However, they never really kind of figured out that all stocks are different. What's good for Bank of America that trades at a penny a share spread and 50 million shares a day may not be good for XYZ stock that trades 50,000 shares a day. Maybe you need a little bit wider spread there to encourage more liquidity. When decimalization, there's nothing wrong with a decimal. That probably makes a lot more sense than an eighth, right? Or a quarter. People couldn't quite understand what the heck is an eighth. Well, it's 12.5 cents. Okay, yeah, that's kind of an antiquated measure. Well, decimalization with minimum fills or minimum increments probably would have been a better idea, or at least a pilot back then to just, to kind of look at, okay, before we switch it over to decimals altogether, maybe we should put a minimum increment on some of the particular stocks that are tougher to trade. Now, finally, years later, after decimalization come in, talk is now coming out about a wide tick proposal, a pilot program, which hopefully the SEC will, approve soon, where there you would have a minimum tick size. And what we're actually recommending, which we hope the regulators are listening to, is don't allow people to sub-penny you within that spread. If I have a 10-cent bid offered at 15 cents and someone can step ahead for a sub-penny, well, you've defeated the purpose entirely of the program. What you should have is kind of a modified trade-out rule where if it's a small cap stock, 10-cent bid offered at 15, you have to either trade on the bid, the offer, or in the middle. Then maybe guys like you would be encouraged more to display liquidity because someone's not going to jump ahead of you for a sub-penny or some meaningless price improvement. A pilot program, again, we're not sure if that'll work or not, but we think it's at least at this point worth taking a look at it.
I couldn't agree with you more there on the at least some type of trade at with this pilot program, because you're right. All we're doing is we're going to widen the spread for the internalizers if we do it that way, because instead of having 3-4 cent spread, they'll have maybe a nickel spread to play in, and they'll just play inside that spread, and it'll discourage liquidity even further. Yeah, I think so. I think it'll discourage even further.
What's happening now, Dennis, I'm sorry to cut off, but is the big banks who are internalizers and the big firms who are internalizers are lobbying for just that, to have either an exemption or not to have this minimum, increments like we're talking about. So it's going to be a battle, and if people are interested, they should definitely comment, because this is when the proposal comes out, the SEC and the regulators need to know what regular folks are thinking, what regular traders are thinking, not necessarily what the big guys who have the ear of the DC lobbyists are thinking.
Joe, you wrote the book Broken Markets here, and obviously you've talked about a lot of different stuff in that book there. What really do you think needs the most improvement here, though, in the whole market structure? We can talk high-frequency trading. We can talk payment for order flow. We can talk internalization. You can talk about all these different things, quote stuffing. What is the number one issue here, really, though, that is, in your perception, making this market broken?
Well, there's no doubt the plumbing, like we talked about before. Let's say, high-frequency trading by itself, no one can even define the thing. Okay, it's such a nebulous name. I was on a subcommittee for the CFTC where our task was to define what is high-frequency trading. We couldn't even come up with a good definition. We wanted to add some more stuff in that we thought was things like inventory and inventory management and positions at the end of the day. They didn't want to put it in there. It was a battle. So bottom line, what I'm saying is you can't even define what high-frequency trading is. The real issue is not necessarily high-frequency trading, but how the system has been built to basically allow a subset of traders who have access to speed, who have access to whether it's colocation, data feeds, special different information coming through, to take advantage of that system, to game that system. And that's what we're talking about, whether it's certain dark pools that have, I guess we have over 40 dark pools now that have limited amounts of liquidity, certain exchanges that have less than 1% market share. Why are they still out there? It's all of these plumbing issues. It starts with payment for order flow. I'll go back to that. If you want to start one thing right away, start looking at payment for order flow. If you get rid of the economic incentives, well, maybe a router maybe the order that was meant to buy your 1,000 shares offered at 15 cents on the New York Stock Exchange, maybe they would actually get executed if it didn't have to pass through the maze of people trying to touch it and take advantage of it because of the payments and the mechanisms that are built in there. Maybe an IOI, maybe a dark pool is paying for order flow, maybe somebody else is giving a bigger rebate. That's where the problems start. And then folks are going to say, well, Joe, if you get rid of that, you're going to lose liquidity and volumes are going to suffer. And you know what? I said, I'll take that chance. I'll take that chance because I'm going to get a better quality volume. The goal that we're trying to do, and we trade for institutional clients, right? Our clients are mutual funds and hedge funds. We want to move stock. We want to trade stock. They love trading blocks. If we can get it done right now, we want to get it done right now. And we want to try to avoid all of these intermediaries touching our order and pretty much taking advantage of it and just flipping in and out. All these guys, look, you guys know back in the old days of scalpers and so on in the pits of Chicago, that's what we're looking at now. It's automated scalping, but it's getting to the point where that's all there is scalpers out there, and the real investors are getting frustrated just throwing up their hands saying this is crazy. So let's start to look at these plumbing issues. Let's start to get rid of some of this conflicts of interest, and now we suggest actually, and this a lot of people don't realize this, we think the market should help itself. The market fixes itself. You don't need a Reg NMS 2. You don't need the SEC and the CFTC coming in writing a 4,000-page Dodd-Frank-esque type of rule proposal. That would take years and would probably be worse than what we have right now. You need to tweak around the edges, but you can't just cancel something and say, okay, we're getting rid of dark pools. Work in pilot programs. Start them out. Let's see what happens. Let's try it in the small caps. Let's see if it helps liquidity there. Hey, I got an idea. Let's talk to the public companies who list their exchanges, who list their stocks on the exchanges, and ask them what they want to see. If you ask most IR execs or CFOs nowadays, do you know what happens in your stock? Do you know why your stock just flash crashed 5% today? Do you know what's going on the Florida exchange? They'll ask you, oh, yeah, well, I never get a call. I used to get a call from the specialist back in the day. They just lost focus of the actual plumbing because it's so complicated. So let's start to defragment this thing and get back to the real purpose of the equity market.
That's the overall thing here. It's so complex, the market structure. Just to keep on top of it here, it's like challenging. It's a full-time job just to keep on top of the daily changes that we have all the time in the market structure. But isn't the whole point to a market just to bring together the buyer and the seller? And now you have all these middlemen, you have all this complexity, you have orders getting routed all over the place before they get there in milliseconds. Shouldn't we just try to go back to the basics here? Wouldn't that be the simpler process?
Absolutely, and unfortunately, look, there's always going to be a middleman. There's most businesses, there are middlemen, and brokers there's value added there. But unfortunately, the middlemen now don't even have clients. A lot of these firms don't even have any customers. And they're just taking a VIG, if you want to call it that, and moving along to the next and not reinvesting it into the equity market, into the capital raising system. So they're extracting profits out, sticking them in their pocket and saying thank you very much because they can, because that's the way the system is set up. Where at least, and people will argue with the old days of a market maker and a specialist, there was an ecosystem there. There was a whole reason why that trading desk existed, how it interacted with the banking department, how it interacted with the research department, how they were pushing IPOs and roadshows and so on. And this entire system helped to raise capital for small companies to grow. Why do we have 200 and some odd IPOs last year when back in the 90s we had over 900? There are reasons why the system is starting to break down. Okay, and we think that the biggest reason is the plumbing. And like you said, there's a very simple process. You're a buyer, I'm a seller, let's match up. Why does everyone have to touch our order flow? Why does everyone have to take a peek at it? It's unnecessary, it's not adding value, and in fact, it's hurting the system. It's very simple to guys like us, Dennis and Joel, but for some reason, other people don't see it that way.
We've gone quite a long time since we had the flash crash that Dennis talked about and wrote about before it actually happened. But now you have all these different exchanges, making you have brokers internalizing orders. You are having individual flash crashes in stocks, but how susceptible is the overall market to a similar event that we had in 2010?
It's still susceptible. I mean, the SEC has added some protections. The limit up down, which we've changed the circuit breakers on the equity market to a limit up down proposal, where they would, after a certain percentage, depending on the stock, it does stop for 5 minutes. That's a good thing. It does add some protections in. However, you can still rapidly lose liquidity, if you want to call it liquidity, and crash down 5 or 10% within minutes. So it can happen again. And I think part of the problem back in May of 2010 when we had the flash crash wasn't so much that it dropped 1,000 points, but how fast it dropped, and then how fast it rapidly came right back. And that's what people shook their heads and said, wait a second, aren't there limit orders down there? Aren't there people looking out for this? What's going on? How can this be? What kind of system is this? You haven't changed any of that. Those orders will still disappear.
Well, the flash crash was a complete liquidity event. I mean, you had specific stocks that had zero bids, like they were hitting stub quotes down at a fraction of a cent. Like liquidity just completely vanished. That never happened back in the day. You had so many institutions that were on the book. You had other participants on the book, but the book is mostly made up of electronic market makers now that cancel all their quotes in a split second. So when the going gets tough, they get out of the way. A human being can't cancel their order in a split second. They can't process it that fast. So now that we're all completely automated, everybody cancels their orders and you got this vacuum.
Right. You know what they call that then? The HFT guys will say, well, we're risk managers. It's prudent for us to cancel those bids because we don't know what's going on in the market and something could be happening, and I can't risk my capital because someone's going to hit my bid and I'm going to get run over. Well, okay, I understand that. But like you're saying, what happened to the real limit orders? Where are the real buyers and sellers? Where are the guys in the middle who say, wait a second, trading Accenture at a penny a share makes absolutely no sense when it's a $40 stock? What the heck was that? So yeah, they got rid of the stub quotes, which was why they got that penny a share. But you can still have ridiculous reactions, and we see it every day with the mini flash crashes when liquidity just evaporates because it's not really liquidity. Let's be real. What is liquidity? Liquidity means I can sell a certain amount of shares right now, and it may cost me a bit below that bid, but I can get out. You don't have liquidity because right now, if something like that flash crash were to happen, those bids disappear and you got nothing. You have zero liquidity at that point. And as long as a market maker nowadays has relatively no obligations to make a market, has relatively no affirmative or negative obligations anymore, they're going to do what they can do. They're going to disappear because there's no rule that says they have to stand there. That's part of the problem.
And is this different with the pink sheets and the OTC stocks where limit orders must be displayed? Is there? Do you see in the same thing in that?
I can't. I got to say, honestly, I'm not too familiar. We don't trade too many pinks here,
Okay.
but that is certainly a market that looks a lot different than we do because you don't have this electronic kind of shenanigans that are going on there. But again, I'm not too familiar there, but it seems like you have at least bids and offers that'll stand up better.
Okay. We've had Joe Saluzzi on at Themis Trading, an expert in high-frequency trading and market structure, giving a very learned view of the subject. Joe, thanks a lot for taking the time out this morning and coming on the show, and we'd certainly like to have you back on again. And could you just, if you get a chance, could you just maybe hop in the chat or put your Twitter follower in there, or your Twitter name, so people can be a benefit of your wisdom as well?
I'll do it. Thanks. Dennis, Joel, thanks for having me on. We really appreciate it.
Okay.
Thanks, Joe. Really appreciate it.
You got it. Bye.
Okay, we've had Joe Saluzzi on at Themis Trading. Tom Chat, you just hop in there. You're talking about particular stocks that are manipulated more than others. I guess it would be some of these, thicker stocks where, there's very little risk. Like in a stock like Bank America, they can, if there's a 17 bid, they can be at 17.001. The thing is where the high frequency traders are going to be is where they have the least amount of risk and where the biggest orders are and where they can lean on, where they can just take a small loss. That's what they do. Oh, I'm sorry.
Exactly. And high frequency trading, all it really is leaning on orders. That's what it is. They want to lean on. If there's no order there, they don't want to have a bid there, obviously, because there's nothing to lean on. They want protection. It's all about protecting themselves. They want to have zero risk situations. If you put your limit order out there, then it gets penny hopped, or it gets, or the internalizers can, they don't even have to penny hop it. They can just basically step ahead of it off exchange. So basically, they're just using your order as insurance. So, and that's what market making really was back in the day too. But you had so many different types of participants, different time frames, and now I wonder, it's the liquidity in the market. Are we too dependent on this high frequency liquidity? Have we knocked out all the old market makers? Like our firm, Bright Trading, used to provide a ton of market to them. And our traders are still there, but all of our guys take liquidity now because we don't want to set our limit order out there and let somebody else use it as insurance against us. So basically, we're taking orders, so we're not providing liquidity. I bet you a lot of other firms are doing the same thing. If you're not, at the top of the pecking order there, and if somebody can lean on your order, I'm not going to give you a limit order to lean on. I don't want to give you that insurance. So that's the problem. How do you incentivize other types of participants to come back into this market and start providing liquidity? And that's the overall question. So I don't think it's not a matter of coming up banning high frequency trading or getting extreme or anything like that, but it's a matter of trying to incentivize other types of participants to provide liquidity as well.
And I just don't want our listeners to get the wrong impression here. I mean, we're just looking for an even playing field. And, when we were trading together in the Bright office and we saw the size there and everything, I mean, hey, we leaned on it. We went into it. We either tried to be participating in it. Now, with the market and the market fragmentation, there's just no good orders out there. And I've said this, said it once, I said it 100 times. Used to see 100 up in a New York stock when
there's news.
Yeah, when there was news, when the hit the fan, and now that's just that's just a common thing that you see out there. But Dennis, we've kept you on for a real long time here. We'll let you
I gotta go get to this open.
Yeah, get ready to this exciting up open here. Just real quickly, let's see. Colt's Luck is looking at this Micron, and holy mackerel, this $25 level is just become just a wall. Trading up in the pre-market, so you are getting a little bit of a running start into it. But those multiple highs between 25.0. Well, like 24.87 and 25.15. Someone's trying to work out here at 25. If you can bust above there, obviously you have the high of the moves, above that. But man, oh man, I checked the book there, see what's going on at 25. So it's 9:12, and we're gonna go from one Joe to another. Mighty Joe Young with the morning headlines.
One Joe's just as good as another, right?
We don't know if we'll give you that, Joe. No, of course I'll give you that.
But two Joes is not as good as
two Joes.
It's not as
good as. We got two Joes. We got a Joel. Holy cow, man!
You're interrupting me. Two Joes is not as good as one Joel.
Oh, look at
darn!
Joel,
Where's the cricket sound on my soundboard right now?
Yeah.
Oh, if we had visuals, there'd be tumbleweeds rolling through the office right now. But anyways, Joe, that was a great interview that you did for us today. Joel, Dennis, props to bringing him on last minute. We had a cancellation for today. I won't say who, but I will say that they've been rescheduled for the 24th. You'll find out then.
What about that one?
Well, it would help if you weren't muted, Joel.
What about that one chick that was going to come on and we scared her?
Well, we don't call them chicks. She's a young woman, and her name is Rachel Fox, and she will be on next Tuesday for real this time, right after behavioral finance, and just forecast for the rest of the week. Tomorrow's Friday, social market analytics. Joe Gitz, president and CEO, and then we have CMT Brian Shannon from Alpha Trends will be on the Friday pre-market prep show. But enough about that. How about today's headlines? A suspected drunken driver faces 2 counts of capital murder after striking a crowd outside a club being used as a venue for the South by Southwest Digital Conference in Austin, Texas, police said. A man and woman died and 23 others were injured, 5 of them critically, when the car plowed through a barricade close to the Mohawk just after 12:30 a.m. local time. Almost 1 million people signed up last month for private health insurance under the Affordable Care Act, federal officials said on Tuesday, bringing the total to date to 4.2 million, but leaving the Obama administration well short of its original goal with less than a month to go before the end of the open enrollment period. White House officials predict a surge in sign-ups just before the 6-month enrollment period ends on March 31st, but it will be a challenge to make up for the slow start that resulted from technical problems crippling the federal insurance marketplace in October and much of November. Only 5.4 million people are on track to purchase the marketplace health coverage by the time open enrollment ends on March 31st, according to a new analysis from Avalier Health. After the Congressional Budget Office predicted 7 million Americans would sign up for coverage, they downsized their estimate to 6 million when technical problems with the healthcare.gov website slowed enrollment in October and November. And even though the website has been functioning well since December, those early problems have cast a large shadow over enrollments ever since. More than 4.2 million Americans have already purchased marketplace coverage. But using the enrollment experience of the Medicare prescription drug program as a template, Avalier projects that 22% or 1.2 million will purchase the marketplace coverage by March 31st. Royal Dutch Shell, Europe's largest oil producer, plans to reduce spending in the Americas by 20% to focus on more profitable projects. Upstream America's profitability has been impacted by losses in resources in plays such as shales, Shell said today in a statement before CEO Ben Van Beurden hosts his first strategy day in London. The company intends to drive hard choices on capital allocation for selective growth and divestment of non-strategic positions. The CEO has pledged to reduce spending this year and accelerate refinery and other asset sales after the Hague-based Shell issued its first profit warning in a decade. The CEO also has scrapped targets for cash flow, delayed drilling off Alaska, and promised to restructure shale operations in North America. In April, United Airlines will begin rolling out a new in-flight entertainment service that streams over 150 movies and almost 200 TV shows to passengers' iOS devices for free. According to United, the system will be rolling out in stages starting next month, though the basic hardware is already on board much of the airline's fleet. At launch, the system will be limited to iOS devices and laptops, though support for Android is expected sometime in the future. The service's hardware backbone to be installed in United's Airbus A319, Airbus A320, and Boeing 747-400 and certain 777-200 aircraft will stream content from an onboard media server over Wi-Fi. By the end of 2014, the airline plans to have this setup running in most of the domestic fleet. To view the various media, which is sponsored in part by the Mileage Plus Explorer card, users must first download the United Airlines iOS app, which will presumably stream content over United Wi-Fi. Users who do not have the app installed may do so for free while in the air. Yahoo has integrated Yelp into its local search results. In a blog post, Yahoo is a Chandrasekaran, I think I got that right, Chandrasekaran said, "Now when you use Yahoo Search to look up a local business in the U.S. on your smartphone, tablet, or PC, you'll see user reviews, business information, and star ratings from Yelp. We've also added a new photo viewing experience to show high-quality photos from Yelp, other partners, and the businesses themselves. It's all part of an effort by CEO Marissa Mayer to boost search revenue and improve experience as the Silicon Valley internet giant looks to increase its market share against the relentless juggernaut of Google." The content from the San Francisco Review site is now integrated with local search and maps. It's handsomely designed, although Google has had a very similar offering, Photos, Maps, Other Info All-in-One, for a long time now, and Microsoft's Bing has been partnering with Yelp for 18 months. Googling the words Dalai Lama or Tiananmen Square from China long has produced the computer equivalent of a blank stare, as that nation's government has blocked websites that it deemed politically sensitive. But China's Great Firewall, as the world's most sophisticated internet censorship and surveillance system is known, is facing a new challenge as Google begins to automatically encrypt searches in China as part of its global expansion of privacy technology, company officials say. Most Google searches soon will appear to Chinese censors as gibberish, blocking the government's ability to screen searches for particular words. Chinese officials and those from other nations such as Saudi Arabia and Vietnam that censor the internet on a national level will still have the option of blocking Google search services altogether, but routine granular filtering of content will become more difficult, experts say. It also will become more difficult for authorities to monitor search queries for signs that an individual internet user may be a government opponent, experts say. And the Jeopardy player everyone loved to hate has lost. Arthur Chu, the 30-year-old trivia whiz who won 11 times on the show, saw his run come to an end Wednesday when he finished last on the popular game show. The bold and brash Ohio native, revered and reviled for his unorthodox playing style, racked up nearly $300,000 during his 12 days on the show. He finished with $0 en route to a third-place finish on Wednesday. She was third in all-time wins, trailing the legendary Ken Jennings, who ran a streak of 74 wins and amassed $2.5 million in 2004. The next year, Dave Madden tallied 19 wins. No dollar amount for Dave Madden? No.
It was in the
Somewhere between,
300,000s.
yeah, just in the 300,000s?
Yeah, it wasn't too
Gotcha.
high.
Today's trivia tidbit, ladies and gentlemen. Brent, you might like this one, so perk your ears up a little bit. On this day in 1965, 20-year-old Eric Clapton left the Yardbirds. In and of itself, one man leaving one band in the middle of the 1960s might warrant little more than a historical footnote, but what makes the departure more significant is the long and complicated game of musical chairs that set off with the world of British blues rock. When Clapton walked out on the Yardbirds, he did more than just change the course of his own career. He also set in motion a chain of events that would see not just one, but two more guitar giants pass through the Yardbirds on their way to significant futures of their own. Today's trivia question, who were those two other guitarists that passed through the Yardbirds after Eric Clapton? Anyone? Anyone? Do we have some guesses out there? Any British blues rock fans out there?
For some reason, Joe Cocker.
Joe Cocker's not a guitar player.
Okay, well, he tried to be. Who went through the Yardbirds after Eric Clapton? Let's see here. Is anybody Googling it?
What's
Brent?
the guy's name from the Faces?
Rod Stewart.
Ronnie Wood. That's what I was thinking.
Gotcha.
That's not the answer. I can tell by the
Okay.
lack of excitement.
Morgan and J. Dot have one correct guess so far. Who's the other one?
Jimmy Page.
I'll give you a hint. This other guitar player was told by his high school music teacher that he would never be a guitar player and he should just give up and quit. J. Dot has it right. Jeff Beck and Jimmy Page are the two guitarists that passed through the Yardbirds after Eric Clapton. Congratulations, J. Dot. You just won. What did he win? I feel like this is whose line is it anyway, right? Like where the
I think J Dot already has it, but Fossil Steel hopped in late with the Jeff Beck. I think I'll give it a tie. So maybe we can give the 2-week free subscription to Fossil Steel to Benzinga Pro. Fossil Steel, you email Jake at benzingapro.com. And he can set you up with that. So
He's also the winner of 20,000 points of goodness.
That's right. That's right. I was going to read the whose line is it anyway, where everything's made up and the points don't matter. So congratulations, JJ. You just won 20,000 points.
I gotta watch that show. I haven't watched that show in a while.
Yeah, it's a good one. So just a reminder, ladies and gentlemen, that this show would not be possible without our dear friends at Options House. That'll give you 150 commission-free trades and as many points as you want if you sign up for an account through this page. There's buttons at the top, at the bottom right. Click on through to Options House, open an account, get 150 commission-free trades and 1,000,000 bonus points from the Benzinga News Desk just for listening to Benzinga Pre-Market Prep. That's a fantastic deal. You can't pass it up. Everyone here has one. We're enjoying our commission-free trades right now, aren't we, ladies and gentlemen?
yippee!
You'd hear them if they were mic'd up. So, that being said, that wraps it up for me. I think Brent is around here somewhere. Brent, I thought for sure that you would have a solid guess for the Yardbirds guitar players.
I'm sorry to disappoint you, buddy.
It's okay, man. No big deal. I know that the British blues rock might not necessarily be your favorite genre, but
I'm not against it. Just
no.
not too excited. Yeah, but that was a good trivia question.
It was. Thank you, Shubs. Was that on your calendar today? The trivia question, was it on your desk calendar?
It was not. It was on the History Channel.
Gotcha. It was
The
on
old
the History
Channel. So we got, folks, about 6 minutes before the opening bell. Let's see, S&P. Quick S&P 500 futures check here. Since about 7 this morning, we have ticked up about 3 points or so. 1873 is the last tick I see in S&P 500 futures. Let's take a look at some of the top upgrades, downgrades this morning. Couple top upgrades. Joel's going to go over these as I'm reading them off. William Blair upgrading shares of Cabela's. Charlie Alpha Bravo is the ticker. They upgraded the stock from market perform to outperform. I don't think we take a look at this one too much, but it is a huge sporting goods store, probably the biggest sporting goods store in the world you can imagine. What's the chart looking like, Joel?
Oh boy, Cabela's. They do have a huge store out in Dundee, Michigan, and I heard that they do a lot of scouting, and they put these places where they can attract like the most customers. And I don't know how they came up with Dundee, Michigan, but I always remember about Dundee,
What's
Michigan.
that?
I used to swim there when
Yeah,
I was a competitive swimmer,
yeah.
and they had well water in their pool.
That seems really odd.
Yeah, yeah, that's my. If we got any Dundee, Michigan people out there, let me know if they still have well water in their pool. Cabela's here. It's trading up here. I mean, not on a lot of volume. A couple spotty trades here, less than a couple hundred. I like way it's just going up. It's breaking out. Had that high at 69.83 yesterday. Filling that gap. Could you ask for a better gap fill than you had up to that? If you can get up to 70.48 today, so that's your resistance point. We are trading above it, but not a lot of volume. So I'm using 70.48 as a key number. Above that, 71.65, double top going back to February 10th and 11th. And if you can come back under 70 and pick it up, that would be, old resistance, new support.
This one's going out to Dennis here. Tim Hortons getting an upgrade over at KeyBank this morning. Upgraded to Buy Tango Hotel. India is the ticker. Have at it, Joel.
Tim Hortons.
Yeah.
I was thinking about the Dunkin' Donuts play of the Tim Hortons. A little sympathy play in the donut sector.
I think that could be a potential play, yes.
Especially the way these guys on the development team have been picking up those donuts at
This
Tim
is
Hortons.
true.
I think that's what's been the boost to this stock here.
Tim Hortons, also known as an intersection in Canada. No? Didn't like that one, Joe? Jake's laughing. I got
Because there's one in like every corner.
Yes.
Okay.
There potentially is like 4 on each corner. I don't know.
Right, we'll have to see if Dennis can weigh in on that. That was a good one, though.
Okay.
Not as corny as my stuff, but Tim Hortons. Now, you said I got an upgrade?
An upgrade over at KeyBank.
Okay, well, they're not loving it here. Let's see what that trade is. That was actually off the close here. Big run up yesterday into this. I guess I'd like to see follow through right through yesterday's high, 56.14 close, 56.37. If in fact you can get the follow through through that area. Another minor resistance point at 56.57. But get running. You might see 57 in the issue today.
I got one more upgrade for you, and it is the first half of a pair trade put on by Bank of America this morning, upgrading shares of Activision Blizzard from neutral to buy. They also downgraded shares of EA from buy to neutral, so have a gander at a couple of those names there, Joel.
Okay, EA was on the upgrade.
EA was on the downgrade. ATVI was on the upgrade.
Okay, taking a look at EA. We haven't pulled this up in a while. Trading down, made a new all-time high. Not a new all-time high. Climbed back to the $30 level yesterday. So we will use the 30.10 and the 29.98 close as a resistance point. Trading down at yesterday's low, kind of interesting here. 29.30 and 29.17, the last two lows here just ticked up. So theoretically, it is opening into support.
How about some of the top downgrades this morning? We do have 2 downgrades on PVH shares. We have a Wells Fargo analyst downgrading the stock to equal weight, and then did I say Wells Fargo? Morgan Stanley downgrading to equal weight, and then Wells Fargo downgrading to market perform. Papa Victor Hotel is the ticker.
This one's taking a little bit of a whooping here. Trading down 3 1/4, only on 300 shares. Be careful here. 118 1/4 is the pre-market low. Just kind of sitting there. I do see a low at 118.09 on February 21st, so we'll keep an eye on that as a potential support level. Also, multiple lows here in the 117 area, 116.99 to 117.21. So that's what we'll keep an eye on here. And ATVI, I kind of skipped over that one. Let's just take a look at that one. Activision Blizzard here, on the receiving end of an upgrade. Let's pull that up for our traders. Okay, gap and go is what you can say in this one. We have opened up 2150, quick down to 2133 here. So that opening print has some significance there. So you need to get through that 2150 level. Haven't been up in this area. Actually, that's a new all-time high for the issue. So. Keep an eye on that going through that 2150 level. You might just see some scale out sellers. Nice run number of 22 might make some sense. It's a big gap up for this stock on just an upgrade. You need to get down to 2066 to fill the gap.
Hey, we did just open for trade 1872.75, 1873 now on the S&P futures. We are near, not the post-market high, but the pre-market high. Morgan just popping in saying if you like ATV, check out Hasbro as a potential dark horse gameplay. Morgan is long has, and Tom Chat saying, hey, he likes Brun on the news. Well, thanks, Tom. I like you in the chat, so continue the engagement. We like that here.
Yeah, we definitely liked any kind of input from you guys. It makes the show a lot better.
Absolutely.
Let's take a look at some other issues to take a look at. Morganomics is doing a good job popping them in here. Zynga, what's it? Farms with Friends? What's the game that they have there?
I think you're combining a couple of the games.
Oh, really?
I think it's Words with Friends, maybe? Words with Friends, Farmville. They got like Townville. They got a bunch of these Ville things.
Okay, it's running into some resistance here. You had a couple highs, 587, 589. Those have been the highs in the move. Probably someone targeting the whole $6 level. So opened up 578, 579 high. I'd still respect that resistance there, that double top. Coming down, not a lot of support underneath because you had that big run up from the 550 level. So let's keep an eye on that as your next support point. Also, you could find a potential daily pivot in there, numbers somewhere maybe around 562, 563, were your former highs, 2 days highs going back to the 7th and the 10th. So that'd be your support point. Also, we haven't talked about the Goog Monster in a while, and it's been kind of quiet. I mean, they haven't been buying anybody or inventing cars or anything like that. Had a nice open, traded up to 1209.99 and got a decline here. I tell you, this is a tough chart to call here. Really been range bound for a long time between 1200 and the all-time high at 1228.88. Did dip under the $1,200 level. I guess I would just keep an eye on that psychological $1,200 level. You get a close below there. Might be time to take some chips off the table in the stock. But that's everyone's favorite stock, and everyone thinks it's going to a 2,000. So, tough call there. Let's look at, before we look at Fuel Cell here. That's making a nice bump up here, perhaps on the positive earnings from, they're construed as positive by Plug Power, but Fuel Cell, as these stocks are recovering here. This one barely a gap. 360 came down to fill the gap, so as long as that 352 holds, may just follow Plug Power higher. Let's take a look at Plug Power. Powering forward here off the earnings, has taken out the pre-market high. Your guess is as good as mine. Didn't even really gap up that much. Probably keep an eye on the average daily range here as as a potential target.
How about, that was Fuel Cell Plug? How about the good old Ballard, Joel? I know we did take a gander at that one on the show. Let's see how that one opened. 632. We're opening about almost $1 higher in Ballard. Is that Am I seeing that right? That's a huge open.
Yeah. Well, 536 was the close. Open 588, but you quickly add another dollar. I mean, these charts are just looking
Wow.
exactly the same here. Perhaps get your retracements out and figure that the yearly move here, or actually, I'm sorry, the retracements you should be looking at on these things, and I can do the quick math here. This hit 838, took a break down to 416, so let's call it a little over a 4 point break. Boy, you're back. You're taking back over this 50% here at the $6 level. So sure like to see it hold in here, or else you may see some profit taking.
One that we have not talked about today, I think Jared was out there in the chat looking at a little coverage on this one, but I think he has since left the chat, said he had to go to work, was Scientific Games. SGMS is the ticker there. They did have results. I believe it was last night. Yes, late last night. Stock is trading up about $2.
Who is
Huge.
that?
Scientific Games is the company name. It is SGMS. Sandy Golf Mike.
Oh,
Sandy.
yeah.
They
He asked
report.
about that a long time ago.
Oh yeah, he's been trading that one. Reported a loss of 1 cent per
Oh,
share on
wow.
sales of just under 402 million, and analysts were all the way down at 320 million. A huge beat on the top line for Scientific Games last night.
It gapped open, but 1530 open 27 low, off to the races. This is the highest the stock's been since it traded up to 1637. There's a good number for you, folks. Back on January 21st, it traded 1637. Also, a couple other highs in the $16 area. So let's see if we can get the momentum through that area. Let's see. Let's see what's going on before we bring Shaky Jake on here. Rite Aid, the benefit of a Goldman Sachs upgrade yesterday. Riding the 2-day move on the Goldman call here. Back above the $7 level. Continued move here. This is this stock hasn't been over 7 in a long time. We need to go back all the way until October of 2001. You had a 766 high, so you need to keep right over 7.
Well, Joel, I guess I'll hop on the show here and get involved about that time. I guess Big Ten tournament kicking off today. You got any predictions? Any upsets you think you're gonna see?
With Michigan on their winning streak and stuff, I would not be all brokenhearted if they went out in the first or second round to get a little.
Who would they lose to in the first round?
Well, I don't want them to lose to it. This is what I want. I want Indiana, Illinois. I want Illinois to win because I got a niece that's going to Indiana. And after Indiana beat Michigan the first time, she sent me a text like, ha ha, and then so
Yeah.
I refrained from, using my Hoosier jokes. And you know that joke, right?
No, I don't
You
think
don't
so.
do you know why they're called the Hoosiers?
No.
Well, because people live so far apart in Indiana that when someone knocks on your door, you go, "Who's there?"
God. Ooh.
Okay, let's get into the Jake stocks.
Alrighty. So you have a couple things moving this morning. I know you guys were hopping into the fuel cell names there, so I'll kind of skip over that. I mean, we saw Plug Power reported earnings this morning, and looks like by simply matching on the bottom line, it's sending them to the upside. JCPenney getting another rally this morning. It looks like it's just sentiment around the name in general. Sorry. It looks like we had Bellis Capital Advisors, Brian Sazi coming out with, I guess the best I could call is lukewarm comments on it. Stern Asia yesterday coming out with cautiously bullish comments on it. It seems like the sentiment around the name is just that, by the end of the year, maybe they can have decent profitability, and they're not looking for huge growth, but they're just saying that, the company maybe can operate on its own and not need to raise more debt or do another offering. So, definitely very cautious optimism, but when you have a stock that's beaten down from the low 20s down into the $5 range, I guess it doesn't really take much to cause a rally. So last time I looked, it was up about 3%. We had a 3% rally yesterday as well, so looks like we're getting kind of some follow through on that.
Yeah, approaching the former high of the move at 928. You hit that a few days ago and pulled back under the slightly under the $9 level, but looks like we are regaining momentum here. Hit 928 in the session. So right now the resistance stands at 920 and 928. As you can see on the daily chart, if you break above the 928 level, things open up considerably until the 970 high.
Another stock that's moving this morning is Activision Blizzard ATVI. It caught an upgrade from Bank of America this morning, who actually kind of is setting up a pair trade here. They upgraded Activision Blizzard while downgrading Electronic Arts, which is EA. Basically, they're just saying that Activision Blizzard has a really solid list of titles coming out starting at the end of March, including an expansion for World of Warcraft, possibly online Call of Duty for China, and they had a few others too, some other major titles that were coming out, and just saying that that's great for profits. And since a lot of those are sequels, they basically already know it's going to do well. They're not risking a ton here, and because of that. That portfolio of games, they're leaning towards Activision Blizzard while they downgraded Electronic Arts from buy to neutral while dropping their price target on that one. So kind of creating a pair trade. Looks like they're kind of coming out saying, if you got money in EA, maybe you don't really do a whole lot with it, but if you're looking to buy something, go Activision Blizzard versus EA. What are you thinking here, Joel? Is there anything on the charts that's talking to you right now?
Right now, the Activision Blizzard did give you a good hint there. Opened up, it had the gap up, the open 2150. That was the high. It didn't even tick through that here. It has traded back under 21, only to 2099 here. So get down to fill the gap here at 2066. If you rally back up to 21 and a quarter level, that would be a 50% retracement of the blocks, of the decline so far. So look for that to be resistance.
So for my obscure stock of the day that's trending to the downside right now is STCK, Stock Building Supply Holdings. They priced a 5.6 million share common stock offering at 1950 last night, and that's by some or I guess that was this morning, very early this morning, 1:36 a.m. Priced it at 1950. Shares are trading at 1990 right now, so still trading a little bit of a premium over what that offering price was. And it's not knocking them down too bad. It broke below the the psychological $20 level, but it hasn't been anything too terrible here. Joel, is the chart showing you anything right now?
A lot of times, I mean, you see the secondary prices act as a magnet here in the session. Not quite there yet. Did make a 1970 low, so we'll just see how the investors evaluate that price, and obviously, if it holds at 1950 level, they'll be looking at it as a bargain. If it falls below that level, perhaps it will be priced a little bit too high. But the stock has made an incredible run, and doing the secondary, bringing some cash in, probably not a bad idea.
Well, as we kind of zoom out and take a look at the markets as a whole right now, I mean, if you got the S&P on a rally, Dow is rallying, Nasdaq did have an update yesterday, but it's kind of fallen through on that while gold is pulling back and crude oil is pulling back as well. Nothing huge out of Crimea recently. I think there's still a lot of eyes there. Maybe not the mainstream media, but certainly the financial world is keeping an eye on that. But I guess it was the news about copper recently in China that's really kicking things around. So with all things considered, Joel, what are you thinking for the S&Ps and the markets as a whole today?
We've rallied up to 1867.75, a little bit short of the three closes we had at an all-time high close at 1871. So we'll keep an eye on that level if, in fact, we can take out that early morning high. Coming back on the downside, you did have a close at 60.75. You only ticked a few ticks below that to 1860. So just kind of looking for a quiet day, looking at support at the close and the pre-market low. The resistance, if you get followed through that pre-market high, 1867.75, 1870.71. Just to close out the show here, DJ's popping in with AT&T. Let's see if it's making its patented run into the dividend on April 8th. People accumulating the stock and getting the read on the dividend, and it surely has. It just broke a string of three consecutive lower highs. Now breaking out above the 3250 level, so that area will now act as support. Things look pretty clear up here as long as you get no turmoil in the market. He had a high at 32.87 on February 24th, and also probably in the stock, the way this thing trades, probably huge institutional orders at the $33 level. That's our show for today, folks. I hope you guys enjoyed the guests. We'll be back with you tomorrow.